guys, my name is Andrew Tronza, and I want to thank you so much for joining me on another ASXC video. This is Arcane Investments, by the way. This is going to be my new YouTube channel where I will go over all of my investment strategies, all of my current investments and my current holdings. So we will start with, first of all, going over ASXC, and then we will go into a little bit of my portfolio as I'm starting my account. I think I have a little bit over $400 in my investing account, and we're going to see what we can do with that. I do plan on making bigger buys and going down the line and adding more money to it, but right now we're just gonna have $450 or so. I think it's $400. I don't even think it's 400. It might actually be less than that, like 380 or something. I did put 300 in, or 400 in at least. I might be down like $20 or something like that. But we'll go over my portfolio after I sort of dive into a little bit of what ASXC is and why I'm so heavily invested in it. Because it is really the only company that I'm invested in other than that and Bohr. And that's really just kind of me rounding off, to be honest with you. Just a good place to kind of just store money for the long term. So with ASXC, and by ASXC is a great place too. It's just I feel like I get more shares with Bohr. With ASXC, we have a beautiful opportunity, is what I like to call it. So for those who aren't aware of what ASXC is, if we look in the profile, this is what they call themselves. Formerly Transcentric Inc., okay? It's a medical device company, and they're engaged in digitizing the interface between the surgeon and the patient to improve minimally invasive surgery, MSS, through digital laparoscopy. Now, that's essentially getting a camera involved in the surgical procedure and being able to use augmented reality functions within the robotics and the robotic arms to sort of guide basically machine-assisted surgery. And so this is really revolutionary because we're adding a robot into a procedural, into a procedural room and into a procedure that requires so much precision. And I think that this is such an incredible industry that I don't hear anybody ever talking about, guys. Like, well, come on, this is insane. You know, this is the future of surgery is going to be robotics. And if you're not going to get in there now, you're going to be very, very upset. So with that being said, guys, we definitely do want to go into what the company is, what the financials are. So financials are a big part of a company, and they kind of give you a good heads up knowing when to buy, when not to buy. Now, if we're here about the stock, now I'm a value investor, so I don't really give two craps about the stock price. I'll buy whenever, but I'm also judicious about, trying to get things on sale, right? So a good way to know whether or not this company is in a buyable position is to go right into the analyst, and I always like to go look at a position's cost distribution. Now, this is basically going to tell you how everybody who currently owns the company has their shares in the company. Now, we can see where the position's cost is, and we can be like, oh, okay, very nice, very nice. This has a very wide amount, so we can see that it's not just like staggered everywhere where it was maybe a few months ago. So we're starting to see a very, very long, solid floor, right, built up around that $2 mark, and we're starting to see people kind of pressuring up. You can see how it's kind of starting to pressure up to that average cost. And another big point is cost concentration. Now, what we ideally want is our cost concentration where it is here, where we see basically as little amount on that circle as possible. The smaller, the better. And obviously, we're not crazy about the 90% cost concentration because that does go. We have people who are bag holding, and we have people all the way up at $6, kind of still stuck. So we have this little bit of cost concentration issue, but nothing too crazy. And it's still definitely fine enough to buy, like definitely not something to be alarmed about at all. So it's not really an issue, but it's just something you want to be aware of when you're buying, that we do ideally want a large amount of the shares that currently are held by stockholders, especially if we think it's going up, to all be in the same area. Now, there's tons of examples of companies that have poor cost concentration, and you can see that it's usually companies that kind of shot up all at once, and you have people coming in at different levels, and it takes a little bit of time for things to consolidate. Now, with that being said, now that we know what the cost concentration is, we can look at the Analyst price target, I don't really care too much about this. I mean, yesterday they thought it was going to be only $1 a share. Now it's $4. And I think that's only going to continue to grow, guys. So definitely want to be buying short-term options here or not short-term options. I'm buying short-term options. I wouldn't recommend it. I'm also not a financial advisor, so don't take this as financial advice. But I'm buying short-term options just because I know how to play with them properly. And I know what I'm doing. But if you don't, you could really get in trouble with some really great companies. So just be careful about that and be really aware of everything. So going into the companies, basically we could look up institutions own about 30%. I think that's really good. I think it's really, really a big, good sign that institutions have such a big ownership stake in the company. I think that means that the big dogs understand what's going on. Now, I don't really like looking too deep into ownership shares. I don't think that really gives me that big of a picture. I think what I want to look at are the financials here. Now, the financials are such a big proponent of understanding how a company works. Now, the total revenue of Asensus Surgical Inc. is about $1.1 million. So they made about $1.1 million. And the medium sector is $64 million. So obviously, they're definitely not going to be top dog, and we're definitely not in a position where we're making tons of money. But as a fledgling company, given what they have, given the robot that they have, and we can go into depth about the Senhance robot, there are many articles referring to the efficacy of this Senhance robot versus the Da Vinci robot, and the Da Vinci is the main competitor of the Senhance surgical system, which is championed by the ISRG stock, Intuitive Surgical, which is currently trading, by the way, guys, $1,000 a share, has been on an absolute tear over the last few months. And I think ARC ended up buying a few of them. But, yeah, definitely a really great company that's doing well as well. And it's in the same field, guys. So ROE, to me, is the most important thing. And we're starting to see definitely a really good movement with the ROE. And that just stands for return on equity. So are we getting back money that we're spending? And we definitely are. And I think we're going to see just some very strong improvements over the next few quarters, as more leases are signed and the company can start really spreading out its sales force between new hires and everything, because there was a restructuring that did kind of gut the sales force, so we're looking to kind of rebuild that now. So definitely still a rebuilding period, don't get me wrong, but at the same point in time, it's a rebuilding period with such a good foundation. And that's really what's important. It's not that we're rebuilding and, we're rebuilding, Haiti or something after a magnitude earthquake, but it was already the poorest country. No, it's like, okay, it was a good company, had some issues, had to do some restructuring, had to get a new CEO, all that. But now we have always had that good foundation, and now we're kind of just rebuilding into a solid direction. And Anthony Fernando is the CEO. He's a brilliant man, definitely extremely qualified to have this position. So very excited to have him on board. Now, when we look at the overall company's stock chart, we can sort of start seeing. We can see that there was attempts to revisit periods. There was times I played this, and I'll go over that when I show you my portfolio. But there were times where I was playing this, and I felt I kind of knew where it was going. And I think now I also know it's going to go up. Like, I don't see a reason for it to go all the way back down right now. I really can't sell that story in my head. That story doesn't click as well as the bears or as the bull story. So I'm very bullish on the stock. I think it's going to go up. I think it's going to go up in the short term, honestly. Just be careful with your short-term options. When you start making a lot of money, consider extending them, each month. Don't let them get too close to the expiration. You really just don't want to be dealing with that. So, remember, guys, there's always more time, always more months to buy, and you can buy out of the money. You can keep betting on short-term growth, or you could buy leap options, whatever the case, whatever works best for you. So with that being said, guys, I think I kind of went over pretty much a good idea on the company, and a good idea at the financials. I mean, I don't know if you guys would even understand book value per share or PBs, and I wanted to go over that, but honestly, I really don't think most people are going to get it. I understand it. I get it. It's in a good position. Look it up. if you really want to know. But there's good signs, financials, good signs in the financials as well. But I don't want to go into those because I honestly don't think that a lot of people are going to kind of grasp it. I think it's going to waste time. So what I'll do instead is I will go into my stock portfolio here, and I trade on Robinhood. Yeah, we're at about 380 right now. Yeah, nothing too crazy. So basically started this month at about 440. We're down about just $57. Nothing too crazy. And this was my portfolio back in the AS. You can see how my chart resembles quite a bit of the ASXC, and you can see how I kind of sold out right around here, and you know, maybe played a little bit up here. Actually, I wasn't playing in here. I was playing in Webull. But yeah, we can see kind of how you know, kind of had to exit the market right here and wasn't really doing anything for these last few months on Robinhood. So this was all kind of just dead stuff. So now we're just sort of getting back into it. But we're still up pretty big on the year. So I think we're up 5,000 on the year. So definitely good. And I've only invested, I think, about 1,000. So up about 500%, I think, right? 5 times my money, something like that. And so I'll give you my options right now. I have $5 calls, 2 buys. Now these ones, obviously, these are low equity, $36, nothing too crazy. Just to kind of, like, you know, I always like to kind of swing for the fences on one of these, and to see if we hit big and, you know, just get a really quick, fast return. But that's more or less just pocket change. Whereas the $7 ones, this is really where we need to see these ones work. But I'm starting to see definitely some good progress with this, and I think all time, so annoying. And I think if we go up here, September 26th, yeah, you know, I mean, obviously you kind of can see this call having lost quite a bit of value, but right here it's looking like it's in a very buyable position. So definitely why I'm buying it now. But one thing that I do want to look into too is, guys, you want to look into my board. I think I have some board here. Only about 32 shares. Nothing too crazy, nothing too insane. But definitely seeing some good movement on the 1-year chart, 1-month chart, and the weekly chart. So definitely holding strong this week. So definitely excited to see what happens. And this one is obviously just a throwaway. I just can't sell it. Just a waste of time. So right now, basically just ASXC, $3 calls, January. Very simple portfolio. And it's currently trading a little bit less than $3. I'm betting that it's going to be over $3 at the very least. And that obviously I'm going to sell well before that date and push my options out, hopefully in a good position. But you know, it's definitely going to be we're going to look to see if we can't get a good momentum swing, where we could go back to some really, really solid growth very quickly, and kind of sell, buy, and see what we can do. But that's currently my investing portfolio. Done decently well for myself time and time again, and just sort of pull the money out. It's not that I lose it, I just pull it out. You know, I just have to get out of the market for whatever reason, whether it be school, whether it be an emergency, you know, something like that. But we're going to be putting more money in. It's not going to be as boring of an account going too far forward. But this is where we're starting, guys. This is where Arcane Investments is at right now. We're at $379. Obviously, my goal is going to be maintaining about 30% rate of return yearly, and I think we'll be good to go. All right, guys, with that being said, thank you so much for joining me, and I appreciate you, and I hope you have a great rest of your day. Bye.